Hey, what's going on, fellow investors? Dennis here. Today we are taking a look at and seeing how much we made on our dividend portfolio here for the last month. Now, I'm actually recording this at like 3:30 in the morning, so I just don't have my camera on. But what we're going to do is kind of just do a quick breakdown. We're going to see how everything is looking. We got some dividend increases here, so hopefully you guys own some of these companies too, because they got some pretty nice dividends coming in for us. So we're going to kind of go over that, take a look at it, see how much we earned for the month, and kind of break this all down. But first, let's kind of take a quick look at our overall portfolio. So current value is $32,603. I don't think that's a big difference from the last video we posted, but still, nonetheless, we're moving in some type of direction, right? You can see for the last day, we're actually down about $58 right there, which is a little unfortunate, but that's totally fine. Let's go ahead and look at the last week here. We're up actually about $62 in the last week. In the month, ooh, look at that. We are up almost $2,200. That is freaking fantastic. And then if we go to the quarter, we're up about $2,600. And check this out, in the last year, we're up about 6,123. Now, obviously, some of that is earned dividends, so it's not market gains, but all in all together, that is what we have gained total in the last year. So, I mean, check this out. A year ago from this recording, right over here, we were at $3,672. This is pretty incredible, just kind of seeing this grow over time. Obviously, we've been able to put in a really healthy amount this last year, but that came with time and education and confidence over building this. Because you could see when we first started this portfolio, it was at $100. That's what we put in. So I always encourage everybody. I always like to show this because I think it's so important. If you are somebody who actually wants to get started before we continue on, I'm going to have a link in the show notes down for you. If you're interested in trying M1 Finance, which is obviously the platform I'm using right over here, I got a full free training guide for you. It kind of goes over all of my training videos to kind of get you started with using M1 Finance. So check that link in the show notes down below. It's entirely for free, but it does help support out the channel when you guys go through and sign up with that. That way you can get stuff that looks just like this. So what we're going to actually go ahead and do is now take a look at some different things on this portfolio. Now, like I said, we're going to talk about the dividends we earned. Before I do that, I just kind of like taking a quick look too, in case you haven't used this platform before. We're going to see the upcoming trades we have for this Monday, in case you guys are kind of curious about it. So some of this is the dividends that we have because I'm depositing about $600, so about a little over $15, or yeah, a little over $15 is dividends, which is cool. The pending orders here at the top, these are the ones that I actually want to have going in a certain amount. So you can see like Amazon, $10, Apple 70, Tesla $10, Google 70, and Airbnb 70. Now the ironic thing about us talking about dividends here today is out of all these companies, only one actually pays a dividend, although there's some cool news that we're going to talk about here today too, so keep that in mind. But nonetheless, I still want to be a little diversified with this. But out of that 600, we are buying into a total of 13 stocks, which is actually a good majority of what we already own, a little over half. So we can see here like Ross, we're getting $111 into that one. Home Depot, 108. We talked about Apple, Google, and all that. You can see here Square, we got 44. Starbucks about 42. Ally around 40. You can see it right over here. We got AbbVie about 1761, Costco 1260. We talked about Amazon and Tesla, and then Johnson & Johnson about 933. Obviously, in the morning, these will just go through. Sometimes this changes just a little bit, but all in all, that should be kind of going through that way. Home Depot and Ross do pay out dividends. Home Depot, pretty decent one at this point. Plus, I always like talking about the dividend growth, and Home Depot was definitely one. And hopefully, now that Ross has reinstated their dividend, we can hopefully see some really good turnarounds from that as well. But let me know if you guys actually like seeing these breakdowns of like the estimated trades too. If you guys do, hit that like button down below. That really does help out the channel, so we can kind of get more people following along if they're interested in this kind of stuff. So let's go into our quick holdings really quick, because I know sometimes quick holdings really quick. I know sometimes people ask me about the unrealized gains because the first number you saw earlier, that over 6,000, that's money weighted return. So that's everything I've ever made, whether I sold it, kept it, or earned dividends. This is everything that is just unrealized gains. That's not dividends or something that I've sold. So we're at 5,129, which is about 18.67%. And so not too shabby right there. One thing I like to do, and this is not really like important per se, but what I actually like to do is keep counting how many different stocks out of the technically now 23, because I accidentally sold a stock, which was a really interesting situation. Out of all these stocks right over here, you can see what I was actually doing was counting how many I have over $1,000 in value. So not what I put in, but just in value overall. So it goes all the way to down here, which is DLR is the last one that just hit over. So it's at $1,008.50. So this is 15 out of the 23 stocks that I actually own. So I own 23. That is the worst 23 number I've ever seen. So out of all those, plus I got, this one and this one right over here, Square and NRZ, inching closer and closer as well too. So I'm really excited to one day have all of my portfolio. So I got all these stocks left here. So I got 1, 2, 3, 4, 5 of them that are in like the 800 plus, another 2 that are right close to 800, and then one that's pretty far back, which is, you can see there's Texas Instrument. That one's at 475. And so, like I said, it's not the biggest factor in the world. I'm just trying to build up over time, but it's exciting to one day, kind of say, hey, every stock in my portfolio has a value of over $1,000. I think that's actually going to be pretty exciting. So hopefully you guys are subscribing and following along so you guys can see when that happens, because I'll definitely let you guys know. And then as far as shares of companies, we have quite a bit of NRZ. Obviously, it's one of the least expensive stocks. Our average price is under $9. And then you can see here we got quite a bit of Apple, Ally, and EEE, and then we got Microsoft as well. But then everything else after that is under double digits when you don't count the these numbers back here. If you're just counting whole numbers, I only got 1, 2, 3, 4, 5 of them. So we got quite a bit to go. So it's almost in reverse order with the values over here on this side as far as what we got left to work on to get double digits. So we got like Discover, Ross, fairly close. Airbnb's kind of getting there. We got 8.4 shares. They're actually the worst performing stock in our portfolio, but fear not, we're in it for the long term. I know some people think about, Airbnb doesn't give out dividends, but maybe in the future they will. I can see that being a possibility. So buying in now, my yield on cost is just going to be outrageous if that's going to end up being the case. So I'm excited for that. But anyways, going back to these numbers, you can see, we're building up a healthy amount of shares because obviously M1 lets us do the fractional shares, which again, just to plug it in really quick, if you want to check out that training tool, or training videos, I should say, just click that link in the show notes down below. I do talk about, going with fractional shares and all this cool stuff with M1 Finance. So if you guys really want to make sure you're utilizing this platform as best as possible, make sure you check it out. Like I said, it's all free, but it does support me when you're using the links and, watching the videos and everything from that channel. So all the way down here, if we go to the very bottom, we still have 2 stocks that are not yet even a full share. So that's Amazon and Google. Obviously, that's because they are really high priced, but that's the cool thing with fractional shares is that the price doesn't matter really, as long as the value's there and you think that the company is going to keep going up based off of their books and everything else that comes along with it. But owning 0.67 shares has given me the opportunity to earn over $400 with Google, and then with Amazon, getting to put in 0.56 shares has given me the opportunity to gain $202. Now, obviously, those are unrealized, but still, nonetheless, that is the beauty of being able to buy fractional shares, is that I would not have earned this money if I had to save up to be able to buy one full share of each of these companies. But nonetheless, we'll get to one full share of these. So we still got 21 companies right over here that are well over at least one digit. So right over here, one day we will get to that full digit with these companies. And again, you guys are going to be able to check that out. So we're going to go to the activities feed here, and we're going to just go to dividends only. So April is a very, very short month with dividends. I actually sold some companies out where I'm not going to be getting paid from these companies anymore in the first month of every new quarter. So something to keep in mind, we're going to see a little bit of a dip when it comes to our total, because I'm going to show you guys our total, and then we're going to talk about those dividend increases. So make sure you're sticking around. But so for these two companies, you can quickly see them. So on the 1st of April, we got paid out from ADP for $2.97. And then on the last day of April, so I had to wait pretty much the whole month to get these dividends, which is kind of unfortunate. We have NRZ at $15.99. So a lot of people know that I normally would have realty income, which is ticker number O, and that actually gets paid out in the middle of every single month. But I ended up selling off on them. They had a really nice rally for a little bit there. Obviously, you can keep going. I don't know, but they had a nice rally, so I ended up actually selling out of them temporarily. Maybe I'll get back into them, but part of my reasoning, and I've kind of mentioned this before, excluding NRZ for the most part, I don't really care for the 4% dividend yields at this moment. One is because I don't need the money now, and then two, I don't want to pay the taxes on that money now, if that kind of makes sense. So what happens is when companies are increasing their dividend every year, over time, by the time I need that money, I will be well over that 4%. So let me jump over to my dividend spreadsheet. So hopefully that makes sense as far as maybe why I'm cutting back on a little bit of the dividends, but not really. I'm actually looking at it more as a long-term play rather than short-term, because I don't need that 4%. I don't need that realty income at the moment. So it's just not that big of a deal for me. But like I said, maybe I'll get back in. Maybe if the price drops enough, maybe it goes down to like $45, I'll buy back in, because I sold somewhere in like the high 60s, I think it was. I'll double check, but I'll most likely forget. So right over here, you can see for the month of April in 2021, we made a total of $18.96 between the two stocks, which is the first time, if I'm not mistaken. Actually, it's not the first time, but it's one of the few times where the first month of the last quarter, I actually ended up making more. So you could see $18.96 this quarter, or this first month in the second quarter, and then the first month in the first quarter was $25.05. So ideally, these are the two comparables that we make, because they're usually the same companies paying out. But because I sold out of some companies, obviously this dropped. Over time, it'll steadily increase and then be always beating, hopefully, that same time period. You could see, obviously, from April of 2020, right over here, we only made $1.83. So far surpassing, almost, what is that, like 10 timing it? Did I say that right? No, it's like 18 times. Yeah, 18 times almost on that. That is amazing. And then in 2019, we got 64 cents. So yeah, we are chugging along in our path of building these dividends, having them increase every single, hopefully month, over every month, over every quarter, over every year. That's ideal, what we want. Like I said, this has kind of been somewhat of a non-normal thing, but we're hopefully going to keep moving forward from that. Real quick, before we move on to, if you're actually interested in this dividend spreadsheet, this is like a dividend tracker that I put myself in that email for the training that I talked about earlier. This will be included in one of the email sequences that you get. So you'll get a couple different emails, but one of them will be this dividend tracker for you, I believe. So that way you can actually get a hold of this. It's entirely free as well. I actually put this together myself. So you could see here for 2021. Oops, actually I didn't mean to do that. So the second quarter we're in, this is the first month in the second quarter, so that's our total was the $18.96. But year to date, with the first and the second quarter thus far, we've earned a total of $140.97. That is pretty awesome. Now, consider that all of 2020 we made $184. There's a really good chance, based off of all the numbers, that we're gonna for sure pass that in the next 2 months combined, especially with June. June's gonna be a really good month, based off of all the payouts, and the fact that we will pass what we made in 2020 by beyond the halfway marker, or before the halfway marker. That is awesome. So we're going to double what we've earned in income from dividends in 2020 up to 2022, or up to 2021 on the halfway marker. That is really, really awesome. We have some charts right over here. You can see like the monthly dividends, the quarterly dividends. I just love seeing these kind of like numbers. Obviously Q2 thus far for 2021 is lower than Q2 from last year, but we still have 2 more months to go. So that's totally fine. And then, let me change this number here because this needs to be updated manually. So currently on average, we are making $35.24. It says 2021, but it's averaging out for 2022. At least I think it is, right? Yeah. Or I said 2022. I meant 2021. So that's the average that we're making every single month right now. Obviously, a lot of people's goals is to get to $100 a month. We're definitely going to get that sooner rather than later. We got bigger goals here. We got goals to hit over 4 or 5. Sometimes I even think really crazy that in like 15 years we're going to hit over like $10,000 a month in dividends, and it could be possible. We just got to be strategic. We got to plan out properly. We got to make sure that we are in a position that we're going to be able to do that. But you guys can stick around and find out about that and how it ends up turning out, because that's what this channel is all about. I'm not trying to like talk about crazy stocks and all that stuff here. This is just long-term play. Hopefully in 15 years, the people that stick around get to see the journey. We're getting very, very close to 1,000 subscribers on this channel. I don't obviously do as crazy work on this channel as I do on my main channel. But hey, once we get to, I don't know why I put a dollar sign there. So used to putting a dollar sign, but 1K. So if you guys are following along, hopefully you guys are going to be part of that first 1,000 before we break that number, and then kind of keep moving past that and keep growing. I'm always a big fan when I find channels that are like that, and then I'm like part of their beginning journey and everything as well too. All right, so what we're going to do is now head over to seekingalpha.com. Because we're going to talk about those dividend increases that we talked about earlier. And I usually only talk about these with the companies that I am personally invested in, or if it's like a really, really big company that a lot of people might be invested in as well. But generally, these are the companies that I have invested. So if you guys are invested in these 2 companies, let me know in the comments down below, because it's so cool to really kind of see these people getting nice pay raises. Now, before we continue on, if you are somebody who needs to refinance their student loans because maybe you are paying a little too much in your interest, check out my friends Earnest. I'll have a link for them in the show notes down below. They will help you refinance your student loans entirely for free, and it takes only about 2 minutes to check out your rates and can honestly save you thousands of dollars. And you can use that money to invest more into the stock market or extra money into your pocket every single month. And again, I'll have that link in the show notes down below so you can go ahead and refinance your student loans. Costco just increased their dividend to 79 cents. So it says right over here, it says Costco declares a 79-cent quarterly dividend, which is a 12.9, we're just going to call it 13, pretty much 13% increase from the prior 70 cents. That is massive, right? That is a 12% increase, or sorry, 13% increase, which is a raise for you. So if you own Costco stock, you're getting a raise for having done nothing. Let's go back over here for a second in my portfolio because I want to show you. Where are they? In retail. So we're going to go into Costco and we're going to see. So we own 2.9 shares of Costco. Now, the numbers I'm going to show you here are very, very small, right? Okay, because we're doing 2.9 shares. So at the original 70 cents a share, we were getting $2.03 for a dividend. Like that was the expectation. Like, I try not to expect dividend raises as much, just so that way when I do get them, they're that much more special. And then we got 2.9. Well, I have more than 2.9, but just making numbers here a little bit easier. We're now getting 79 cents. Now, that is $2.29 right over there. So if we want to take that, so minus that. So we're going to get an extra 26 cents for the amount of shares that we have in 1 quarter. But if you times that by 4, because 4 quarters, we're going to get an extra $1.04. Now, to most of us here, including myself, $1.04 is not a lot of money, especially in a span of a year. But one thing you got to consider is we have a small amount of shares for Costco. Imagine if we had, 100 shares or 1,000 shares or, something crazy like that. These dividend increases are going to be even much more impactful for us, right? But still, this is a 13% increase on money that I'm now going to make for having done nothing more than just own the shares, knowing or wanting that share to go up in value and already getting a dividend from them. Now, the dividend yield on Costco, as you probably saw here, is very low, 0.87%. I told you I don't care about the 4% because I'm not in it right now to actually make the dividend income that most people want. I don't want the money right now. So the reason I don't care is because Costco is somebody who's increasing their dividend by 13%, where a company that's paying 4% yield right now is probably increasing their dividend by 1 to maybe 3%. And so your money's not growing as fast as potentially inflation is. And so even with a low yield now, if Costco continues with that 10% or more, like this kind of increase, we're going to see some really good yields on cost for us having invested now instead of, investing in the companies that are paying the 4 or 5%. So this is obviously a small increase, but again, it's still impactful because 13% is huge. Also, too, quick note for anybody who's a realty income investor, they're doing like some kind of like merger or something like that I saw earlier. So I saw that right there, so it kind of reminded me. I thought that was kind of interesting, to be honest. So I had to read more into that because I know a lot of people are into realty income, and like I said, I was as well prior. So that's very interesting. So next up here we have Apple. Obviously, a lot of people have Apple, and if you own a lot of ETFs or some of the big ETFs, you most likely own Apple within that. So they actually raised their dividend by 7%. So you can see here it went from 20 or 2, geez, I can't even talk, 0.205. Oh my gosh, I really can't talk. This is what happens when it's like 3:30, 4 o'clock in the morning. So yeah, this was their dividend before, which was like 20 cents and a half. I guess that's how you say it, 20 cents and a half. And now they raised it to officially 22 cents, which is about 7.3%. It's quite low for Apple because their actual payouts is really, really small. So they could have done more, which honestly, they should have gone over the 10% number. But still, 7.3% increase on your pay is pretty massive. Can you imagine every year getting a 7% raise? So their yield is also very low, similar to Costco. It's 0.66 on this one. So definitely nothing to shout out about. But let's take a look here with our portfolio because we own Apple, obviously. Actually, let's just go to the holdings. So we own, let's do this. So we own, what is that? So 31.74. I'm going to count that 7.4 because it's a decent amount. So let's do this. Let me bring up my other calculator here. Okay, so we got 31.74. So they were paying us before 20 and a half cents. That sounds so weird to say. So my expectation was in this newest dividend we're going to get was $6.50. And then now that it's 22 cents, we're getting $6.98. So what is that a difference of? 47 cents for this quarter, and then times it by 4, almost $2. So it's $1.90. Again, it doesn't seem like a lot of money, right? Like it's not. $2 is not a lot of money for the year. 47 cents per quarter is not a ton. But the other thing that I kind of forgot to mention with Costco was the fact that if you consider the fact that in order to have gotten that amount of money so what was it? Let me just divide this by 4 again. Made everything go away. Hold on. There it is. Okay. So if we have everything go back, so 47 cents. So if you really think about this, now that they're paying 22 cents a share, right? In order to get this, if you want to just do easy numbers, you'd have to own 2 more shares, a little over 2 more shares of Apple to have gotten that amount. And if that doesn't make sense, the way it kind of works here is the fact that for every share you own, you get 22 cents, right? But now because I am getting 47 extra cents, that's as if I had bought 2 more shares of Apple. And Apple right now is trading for $131. So that's effectively $260 plus to have been equaled out to that same amount of a pay raise that I got from just the shares in dividend or per dividend, or shares per dividend, the total dividend that I have earned versus having to buy another share. Obviously, I'm still going to be buying shares of the company, but when you look at it from that perspective, yeah, you'd have to spend $260, get that 22-cent dividend per quarter for each share, and that would equal out close to this, right? Because 22 times 2 is 44. that's fairly close to this. So just kind of, making it easier numbers there. So that's $260. I didn't have to invest in the company to get that payout, that now they're increasing the dividend, which is effectively giving me that value, which is really cool. It's a very, very cool thing when you really think about it and how it kind of like works out all together. But I want to show you this other thing too that I love to show you is the dividends on the yield on the dividend. And so what this is very important to me. So right now, Apple, you saw, is paying, very low dividend yield, about 0.67 right there. If you held the stock for 5 years, over the last 5 years, and bought it 5 years ago, let's say you didn't buy anything else into it, you just bought it one time, $10,000. Well, your dividend yield right now would be close to about 3.76%. Because every year, if they're increasing their dividend, you're getting closer and closer to that 4%. If you invested 10 years ago, check this out. Boom, you would be close to 7-8% almost on your dividend yield on cost, which is crazy to think about because back then it wasn't 7%. It was probably 1, maybe 2% at the most. So people didn't care about that. But now, because they've owned it for so long, they've had the dividend increases, that is going to get them that yield on cost around that 7%. Now, obviously, if you're buying in throughout the years, your yield on cost is not going to be 7% because you're buying it in at more expensive price points and so on. So for me, that's still the goal, right? It's still put in as much as I can over the next couple of years and then let it ride for another 10 years. And then we're going to get that really nice increase over the years on those dividends and then actually be making that dividend income that we want, which is going to be, anywhere from, a couple thousands every single month to maybe even 10,000 if we are very diligent with how we are investing into the portfolio. So that way we can have it continue to grow. If you want to keep on learning though, because I think the biggest thing when it comes to all this is making sure that you are paying attention and maybe watching some more content here as well too. So what I'll do is I'll actually place my latest video here so you guys can continue watching and learning and growing with your portfolio. My name is Dennis. I'll see you in that next video.